With market volatility returning this time of year is when it usually happens, we're really excited about what we're seeing with the trend jumper. Many of our favorite day trade plans have broken out to new record profit levels. These are the same trade plans we've been using in our live trade room for 2 straight years now. And I thought I would walk through today's trades. Most of our favorite markets were finished with the very first trade hitting explosive moves early on. One and done. It's our favorite way to finish a Friday session and roll into the weekend happy with new record equity highs. So I thought I would walk through a number of our favorite markets that we trade, show you how the trend jumper continues to work, and it is really loving the increase in volatility. Of course, the trend jumper has the uncanny ability of putting us in front of the big moves before they happen. And you'll see that over and over again. We've been seeing it for 2 straight years. We still see it, and we saw it today. The one thing I want you to pay attention to is that the strategy I'm going to show you is the exact same strategy on each market. It's the same everything. It's pretty amazing. We haven't really changed it in 2 straight years. It keeps working, mainly because it's based on pure price action. But let's get right into it, and I'll show you. We'll start with crude oil futures. This is the first futures market that we begin trading in our trade room. We start at 8:50 Eastern Standard Time, 10 minutes before the pit opens. As we're approaching the open today, we notice a setup, and let me get to it. See, all this pre-market action, we're not interested in. I mean, sure, there's some good moves, but we just stick to our trade plan so that we can just be consistent and disciplined traders. Sometimes we're going to miss some nice moves, but it doesn't matter. There's going to be more nice moves in the market. And this trade plan has worked for so long. If it ain't broke, don't fix it. We keep using it. Today we made record profit levels again after 2 straight years of this exact same trade plan. Notice the setup right here. You can tell we're going long because it's above the bar. The little plus sign is our entry. We're going to be going to the middle target. That middle target is dynamically adjusting. Actually, all the targets are based on the volatility of the market. And our stop is down here, okay? But notice that we're a minute and 18 seconds in front of our start time. So we're waiting. We're not getting into this trade. If it comes back to our entry at our start time, then we can take that trade. And you can see on this bar here, this bar closes after our start time, and you can see that it did hit the entry. So we're getting long here, and it's pulling back right away. And that's pretty normal. We had a nice move up, and it wants to find a little bit of support before heading higher. This is the jump trade that gives the trend jumper its name. The whole idea is that it's like jumping off a trampoline. The trend jumper is looking for near-term support and resistance levels from which to jump off of. This green dotted line is the jump line, and it does a fantastic job of identifying where that near-term support is. So when we get this nice move up, the market's reacting a little bit, and it finds support right at the jump line, and then it starts pushing higher. There was another setup here, but we're already in this setup. So we ignore this one. Okay, we don't care about this one. We're already in this one. All right? So once it gets to that first target at 84.31, it's already moved 10 cents. That's a $100 move per contract. Okay? We're typically trading trend jumper with 2 contracts. The first contract we're going to exit at that middle target. The second contract we're going to trail the very same green dotted line, the jump line, which is also a fantastic trailing tool because it's showing us the near-term support and resistance. So we just hide behind it and ride it all the way up. But when we get to that first target, we're going to move our stop from here, and we're going to lock in a tick and take the risk off the trade. It's even going to cover the cost of the trade if it works against us and stops us out. That way we at least have our commission covered. Get that 1 tick. And that'll happen sometimes. So now that we're in a risk-free position, on the next bar it pops up and it hits the target. And so right here you can see it's already a winning trade because the trailer has 1 tick locked in. That's not going to lose. And the first part of the position got out at its target objective at 84.37. That's a 16-cent move at $10 per penny. That's $160. It's coming off if you're trading this with the 2 contracts, right? You got your second contract with a guaranteed break-even situation. All right? So we don't care what happens at this point because it's just another trade in the trade plan. We know that we hit our goals. We hit our full target. We have a positive result today. No matter what the market wants to give us, this is our last trade of the day. Okay? But sometimes the market has more in it. You can see how accurate the targeting is, that third target actually marking where there's some near-term resistance, right? You could have taken profit there too. That's certainly a variation to the theme. That's not how we do it, but you could have. Notice that when it came up and hit that second target, that's right where it got rejected. Okay? That's the whole trampoline effect, the whole jump, the trend jumper jumping and grabbing that high percentage profit point. Okay, and the trend jumper knows how to calculate all that in real time, and it's adjusting to the volatility of the market. Okay, so that's why it keeps working. It has some of the key ingredients that a robust strategy has to have in order to be able to handle all different kinds of market conditions, and the trend jumper keeps doing that. All right, so look what happens. It keeps hiding behind the near-term support. And notice how the stop is pushing up. This is the professional version of trend jumper. If there's another version where we just follow the green dotted line, the professional version has some convenience tools where it actually plots the dots and tracks the trade for us. Okay? If we were trading the standard version, it would look like this. Basically, it would look exactly the same. I'll just turn it on and let you see the difference. The rules are the same. The trade's the same. You see the exact same trade. Even the lines on the target the same. All you do is trail the green dotted line. You could follow it visually like so, and it goes up, and with each bar that closes above, we just trail below. And the whole trade, of course, is in the data window. You can see it all right here in front of you. You see? The entire trade plan is laid out for us. There's other trades along the way, and if we knew in advance this was going to be an explosive move, we could be building our position, taking another position here, another position here. And advanced trend jumper traders learn how to do this, but it really isn't necessary. You're just riding your second position all the way up. Finally, it comes down and stops as it pushes below the green dotted line. That's a pretty strong move. That move was good for 68 cents. That's $680 with the single remaining contract. Add that to the 16 cents that this fixed target made, and you have a trade that made 84 cents. $840. So that's how we started our trading session today and how we ended our trading session for the week with crude oil. I want to just remind you that when we entered the market this morning, all we saw was the right edge of the chart. We didn't have the knowledge that we were going to make 16 cents or 68 cents, but we did know what our entire trade plan was going to be. The trade was planned, and all we had to do was execute the plan. Entry, target, stop, trade management rules that moves the stop, and then the ability to continue to manage the trade with a well thought out plan that continues to work, that pretty much grabbed us the lion's share of this move. And that's the predictive ability of the trend jumper, being able to put us in front of the explosive moves before they occur. If we would have kept trading, the next trade would have been a short. You see, the entire trade is right in front of us. You click on the bar, here's your trade. Entry, target, same plan, and it would have been a loser. Okay? So you would have now had to take another trade. This is why we stick to our trade plan and use what we call the power of quitting. It's a dynamic goal-setting strategy that actually empowers us to quit trading so that we can keep our profits. We take what the market wants to give us and we move our accounts forward on most sessions. And like this, we continue to grow our accounts and hit new record profit levels on a steady basis. There were plenty of more profitable trades to be had. After that losing trade, there's a nice winner right here. We would have taken what we call the inside trade, the white trade. Okay, and we would have made a nice little move. But we don't need this. As we grow our account, rather than trading more, we just increase our position size and continue to trade less. Working smarter, not harder. Let's look at the exact same trade plan on today's Russell E-mini trade. All right, with the Russell E-mini, we trade a 1-point momentum bar, and we're just isolating one specific trend jumper setup on this market. We're not using the entire arsenal of setups. We found that the one setup with this particular chart just works fantastic. So it keeps things really simple. and we start right at 9:30. And here we are at 9:28, and you can see a trade is already triggered in. We're going to let that one go and wait for a fresh setup. Okay, just sticking to the rules of the trade plan that continues to work for us. Today was no different. We missed a nice move. In crude oil, we could have gotten in sync with the trade and we would have caught this move, and some Russell traders will take that trade and they would have done fine. There are many ways to trade the trend jumper. It's a very versatile strategy. Notice we only see 2 targets instead of 3. You could put the 3rd target on here, but to keep this really simple, we're going with the 2 targets. We move our stop at the first target. You can see how the stop moved from here down to here when that first target was reached. Half the position is taken off at the second target, and the rest of the position trails the jump line, just like crude oil. Okay, that one finally ends. Now we're waiting for our first trade of the day, and it comes here. It's a long trade this time. Notice that was a short trade. This is a long trade. The trend jumper is going to tell us when momentum has turned. Okay, and now momentum is up, and you can click on the bar. You got your entire trade, 1061.8 going to 1063.5. Gets to the money management level there. The stop moves to lock in the 1 tick, just like on crude oil. It's the same strategy. Hits the full target, exit half the position. Lots of strength on this move, and you can see the stop trailing the jump line up, up, up. Doesn't stop out here. Look at that stop, perfectly placed. The stop continues to move up, up, even higher. Finally, it stops out right here at 1069.2. That runner was good for 74 ticks, 7.4 points, 17 ticks to the fixed target, 9.1 points, 91 ticks at $10 a tick. That's $910 on this one move. Record profit levels. The Russell has won all 5 of its sessions this week. In fact, it's won the last 16 sessions in a row. It's on a 3-week session winning streak, literally not posting a losing session since 17 sessions ago. September 18th, Thursday, September 18th was the last losing session on the Russell. And as a result, record profit levels. Also, if you want to follow along with the Russell on our blog, I'm actually tracking these trades, and you can catch a running tally. So the whole experiment is, if you were to start with a $5,000 trade account, you would only trade a single position of the fixed target. You would continue to track the second position, and we would take off $5 in commission and a half a tick of slippage on every trade and give a running net result each week.